India's economy is gaining momentum in the second half of the financial year 2025, with key indicators pointing to a recovery. The Reserve Bank of India's latest State of the Economy report highlighting a rebound driven by strong rural demand, easing inflation and policy support. Retail inflation fell to a 5-month low in January thanks to robust kharif production. Lower vegetable prices as well. However, risks remain. Volatile energy prices, global financial uncertainty and adverse weather conditions could push inflation higher. Despite these challenges, the RBI expects inflation to ease to 4.2% in 2026, down from the current levels. Urban demand is also poised for recovery, supported by a decline in inflation and the government's latest tax relief measures. The Union Budget 2025 to 26 raised the income tax exemption limit from 7 lakh rupees to 12 lakh rupees, injecting an estimated 1 lakh crore rupees into the economy. This is expected to drive higher household consumption and support overall economic growth. The Indian economy is set to remain the fastest growing major economy in 2025 to 26. High-frequency indicators such as vehicle sales, air traffic, steel consumption and GST e-way bills point to a pickup in activity. The Union Budget 2025 to 26 aims to sustain this momentum by strengthening the 4 key drivers of growth: agriculture, MSMEs, investments and exports. The slowdown in economic growth during the June quarter of the financial year 2025 led to growing calls for a rate cut. And responding to this, the RBI's Monetary Policy Committee reduced the policy repo rate by 25 basis points to 6.25% in February, the first cut in nearly 5 years. The move is expected to boost domestic demand and improve credit conditions. The RBI's policy measures and India's economic outlook have influenced financial markets, with foreign portfolio investors showing renewed interest in the debt segment. January, in fact, saw net foreign inflows of $1.7 billion, the highest since October 2024. Additionally, Bloomberg Index Services included Indian government bonds in its emerging market local currency index, triggering over $1 billion in fresh inflows. To support market liquidity, the RBI intervened heavily in January, purchasing 39,000 crore rupees worth of government bonds in the secondary market. However, risks persist. A strong US dollar, driven by America's economic resilience and evolving trade policies, could lead to capital outflows from emerging markets. Higher risk premiums and increased external vulnerabilities. And despite these challenges, India's economic fundamentals remain strong, with robust domestic demand and policy support expected to sustain growth in the coming quarters. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.